What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this Sunday afternoon. So what we're going to be covering in this video is a brief Ortex update going into the next week, and we're going to compare this to the institutional buying for AMC. We are seeing the short interest continuously go up, and institutions are piling into AMC at a massive rate. Now, the second thing that we need to go over is something that we have been talking about on this channel for months now. We have been going over this situation with the broad market and how it affects AMC, and it seems like every day or every other day, we are seeing more indications, either economic indicators or large institutions coming out bearish on the market that is suggesting that a major market event could be coming either in Q4 or the beginning of next year. Now, nobody knows when this could essentially play out, but it is very helpful to know that these situations are brewing in our markets at the current time. What we're going to be discussing in this video is a liquidity crisis that is beginning to form. We have started to see this start to form in the past, but now we are starting to see a lot of these indicators start to suggest this as well. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. Again, it costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you want to see more videos like this, make sure you hit that subscribe button. So again, AMC closed on Friday at $33.50, and that was one of the first green Fridays that we have seen in about a month and a half, a little over a month and a half, actually. This is a very good sign to see, and I'm excited to see what we have going into next week. We discussed this in my previous video, but this upcoming week is a monthly options expiration date. What this usually leads to is higher open interest on the option chain, higher volume, and typically more volatility. Now, when we come over to the Ortex update, utilization at 92.56. Again, I'm expecting the utilization to continuously go up, but we have the short interest as a percentage of the free float as estimated by Ortex. And again, these estimates, in my opinion, are just a baseline number of what the actual short interest most likely is. We are seeing that at 19.01%. Now, when we look at this chart right here, as the exchange reported short interest reported in this blue line right here, we are seeing the short interest at highs. We really have not seen the short interest this high since about back in March. We ran up to the really high short interest numbers that we saw in the beginning of June before we saw that run up, and we are seeing it start to curl up right now. Now, at the same time this has been happening, institutions have been piling into AMC. $2.14 billion of AMC was bought in the second quarter. I know it says Q3 right here, but it is actually numbers reported from the second quarter of the second quarter 13Fs, and only $143 million of AMC has been sold. The really important thing that we need to think about here is that the June run-up was at the beginning of June. The effective dates for all of these 13F filings is at the end of June. So what this shows us is that a lot of these institutions are not only diamond handing their AMC positions, but they were buying even more. Now, it is very rare to see a stock go from $10 all the way up into the $70 range and not have a lot of these institutions take profits. What this is showing me is that it is very probable that these institutions have done the research and know the vast potential of this situation and are in it right alongside us. Now, that does not mean that they are really on our side per se, but in this specific situation, they essentially are. Now, the other interesting thing that we need to go over about this institutional ownership chart is that the institutional ownership percentage right now, as reported by MarketBeat, is 25.45%. A lot of these institutional ownership percentages, if you look at Yahoo, Fintel, or any other source, they're going to be different. I've seen it as high as above 30, but every single time we look at this, it is above 20%. So what we're seeing here is that institutions are not only continuously buying shares of AMC, but we are seeing the ownership percentage continuously go up. We know that retail investors are continually buying the dip, adding to their positions, especially at these lower levels. So this is just a really good sign to see going forward. Now, in addition to this, comparing the institutional purchases from Q1 2021 to Q2 2021, we only had about $339 million of AMC bought in the first quarter. When you compare that to this quarter, it is a very significant difference. Now, what we have to cover now is this liquidity situation, this liquidity crisis that is starting to form. We've been talking about this on this channel for a while, and again, we are continuously seeing more updates suggesting that this situation is coming to fruition. So we have seen from Bank of America last week, it does mention that in this article above, that it is likely that the S&P 500 tests its 200-day moving average in the second half of 2021. Now, that 200-day moving average is about 11% lower than where we are trading at right now. And the fact that everybody is already over leveraged, which we're going to go over a little bit later in this video, that 11% or even lower or even higher of a drop is going to feel like much more because of the over leveraging. Now, furthermore, as noted by Bloomberg, liquidity is evaporating from the market even as investors continue to chase stocks higher. Put another way, the recovering economy is now drinking from a punch bowl that the stock market once had all to itself. How big a threat is this? While stocks kept rising during frequent negative Marshallian K ratings in the 1990s, the pattern since the 2008 global financial crisis, a period when the central bank was in what Ramsey calls a perpetual crisis mode, begs for caution. Now, when we come down to this chart, we can see recently this Marshallian K rating has just turned negative. Again, this is a measure of liquidity in the market. Now, when we come over to this Benzinga report right here, we can essentially see the Marshallian K is essentially a measure of liquidity, the difference between the rate of growth of the M2 money supply and the rate of growth in the economy. So we can see here, the chart is a little bit bigger, that a couple of times these ratings have superseded or preceded a correction in the market. Now, we know that everybody is over leveraged right now. And when we come over here, we went over this in my last video. In Fed's recent minutes, they noted that hedge funds are historically more leveraged now than they ever were before. Now, recently, we have also seen the margin debt start to come back. Now, this could be a result of institutions deleveraging their portfolios or so many margin calls, which we have seen from the DTCC and the NSCC due to these new proposed rule changes. And again, you are not going to see news articles come out that says this one institution got margin called. These things are going to be happening behind the scenes, and we are in the middle of that slow liquidity bleed out that everybody is really looking for. Now, what we also have to mention is that these margin calls are going to continually ramp up. We know that from our previous research this week, directly from the DTCC, as we can see right here, that there will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians to keep safe collateral. So what we're seeing here is that a lot of these margin calls are going to be issued on these OTC over-the-counter derivative positions. Now, coming over here, we can see that JP Morgan, Goldman Sachs, Citibank, and Bank of America are some of these institutions that are very, very over-leveraged on a lot of these derivative positions. Now, not all of these are going to be OTC derivatives, but I would speculate that a vast majority of these derivatives would fall under that OTC derivative classification. So everybody has really been asking, when are these regulatory institutions going to step in? When is the DTCC going to do something? When is the SEC or the NSCC or FINRA? When are they going to do something about this situation? They already have. We have seen this start to play out. And again, you aren't going to see news articles or basically large moves in the market until this slow bleed of liquidity really concludes and they have to liquidate a lot of these positions. We've already seen these large institutions starting to deleverage and liquidate a lot of their portfolios. And in my opinion, it is only a matter of time. And something also that I want to address that I think some people were confused on in a couple of my previous videos when we were talking about this September 1st date, this is not the date that AMC is supposed to squeeze. Remember, guys, no dates, no price targets. This is just the date that is directly from the DTCC where they are saying that there's going to be an uptick in margin calls. And again, margin calls do not mean forced closing of positions. It just means that you have to put up more capital, more collateral, in order to stay in those positions. So it is just basically amplifying the liquidity bleed out that we already know is occurring. So that is going to conclude this update on AMC with all of the different things that we have been seeing with the institutional purchases. We have seen great earnings for AMC, the short interest and utilization continuously going up. I'm incredibly bullish on what we have going into not only the end of this quarter, but the end of this year. It is entirely possible that we start to see these big price movements back to the upside. But again, we are just going to have to wait and see because we know this stock gets really over manipulated. So again, that is going to wrap up this video. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.